100% of my liquid net worth is in cryptocurrencies. Right now, crypto as an asset class is $2.5 trillion. If I just use the log regression channel of Bitcoin and just project out the growth rates of crypto versus the internet, I'd assume it slows down massively from here. It gets to $100 trillion.
So when do you think is a good idea to take some crypto profits?
Now guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Let's join Raoul Powell in a conversation about these topics and more.
I've been hearing you say that you've got like 90% of your portfolio in Solana. Is that true? Like you put 90?
Yes. And 100% of my liquid net worth is in cryptocurrencies.
I know. Seriously? Yeah. Like 100? And do you have real estate? Do you have land?
Yes, but that's not liquid.
Yeah, I know. But
yes, I have real estate. This is my house in Little Cayman. I have,
like you own all that stuff. You have real estate, but you don't own stocks then. Like when 90%, 100%.
When I divide the Nasdaq by Bitcoin, Nasdaq's down 99.97%. What's the fucking point? You just own the strongest asset. If everything is correlated and driven by the same forces, you end up with a logical conclusion, which is you only need to own one asset, which is crypto, which is bizarre. And then the game is, okay, which cryptos are outperforming? You do charts of anything versus Bitcoin and anything versus Ethereum. And if anything looks like it's breaking out versus those, that was Sol. So now my job is to look at anything versus Solana.
Yeah.
But Solana's a big project. So if it's a small thing, maybe WIF or one of the memes, I'll have a small position, but I won't put my life savings into it. But Solana's big enough, has big enough network adoption effects for me to say that's fine.
So when do you think is a good idea to take some crypto profits?
So I didn't take profits last cycle, and I didn't want to because I've found that just holding over time, even though it feels dramatic, holding over time and adding when it sells off actually is the way to compound wealth. Because you don't, because if not, if you've gone in the bull market from 1 to 10 and then it falls 80%, you won't put 10 back in. You won't because you're more risk adverse. And I can't lose everything, right? Your mind will play tricks with you. So you just leave it in and just say, okay, I've got a longer term time horizon. But for those people who want to cash in some lifestyle chips or de-risk, then, you use some time like the end of the year, beginning of next year, you cash in a bit of money and then just ride the rest. Now, does it peak early? We don't know. Does it peak towards the end of the year like it's done in every cycle? Possibly. Do we have a blow-off top? Possibly. I don't know. We can't really tell. So you need to set yourself up in advance where you're not hoping for the blow-off top. You've taken some money off. And if it does blow off top, you can take some more off. If not, you just keep running it. Crypto prices based this week, and that we should start to see stronger prices going forwards. The banana zone then should accelerate before the US election. Then it probably usually pauses a bit while people get confused over the election, see what happens. And then things go really crazy towards the end of the year. So the banana zone is fully in play for me. People just need to have patience.
Best-selling author Robert Kiyosaki warns of an impending market crash, followed by a significant bull run for gold, silver, and Bitcoin. He predicts that Bitcoin could reach $10 million per coin. On Wednesday, Robert Kiyosaki, author of Rich Dad, Poor Dad, took to X to warn about an imminent market crash. He predicts a significant downturn affecting real estate, stocks, bonds, and major assets like gold, silver, and Bitcoin. Despite the forecasted crash, Kiyosaki believes a long-term bull market will start in late 2025. He suggests that investors in gold, silver, and Bitcoin will benefit significantly from this cycle, rewarding their patience during the downturn. Kiyosaki shared potential future prices for key assets: gold at $15,000 per ounce, silver at $110 per ounce, and Bitcoin at $10 million per coin. He attributes these optimistic forecasts to declining confidence in fiat currencies. Consistently critical of fiat currency devaluation, Kiyosaki emphasizes that market crashes present unique opportunities for wealth accumulation. He has long advocated for investments in gold, silver, and Bitcoin, viewing them as safeguards against economic instability.
The world has too much debt. In 2008, we broke the world. Most of the governments around the world got to 100% of GDP in debt, and the banking system failed. We reset interest rates to zero back then, and everybody reset all of their debts on this kind of 3 to 5 year debt refinancing cycle. Now, there's not enough GDP to cover the debts from the private sector and the public sector. So what we found from 2008 onwards, the major central banks just printed money via liquidity, whether it's quantitative easing or other measures, and that printing of money helps pay the interest on the debts. Now, when you print money, you actually debase the money. And when you debase the money, it optically makes asset prices look like they're rising because you're lowering the denominator. So we see every 4 years this cycle where they begin to in year 3, they're starting to add liquidity. Year 4, they're really adding liquidity. Year 5 of the debt cycle, they're still adding liquidity. And then they slow down again, and the cycle keeps repeating. So we get this 3 year of liquidity that rises all assets, but particularly long duration assets like crypto and technology. So there's a 97.5% correlation between the NASDAQ and this mechanism of adding liquidity. Crypto's about 87.5% correlation. It's got less correlation because it keeps having these massive exponential moves. So what I did is, looking at that, I realized, okay, we're actually getting poorer by 8% a year, which is the global debasement rate. That's the increase in global liquidity from the major central banks. And therefore, that was our hurdle rate on asset prices, plus the rate of inflation. Let's say global inflation is 4% for easy numbers. So that's 12% we need to make in our investments before we even break even. If not, our future self is poorer because we're not being able to own enough assets in the future because asset prices go up. We don't make enough out of our investments to offset the debasement. So I divided all assets by the global liquidity and found there's only 2 assets that actually outperform it. The rest don't go anywhere. And the 2 assets are technology stocks because they're in a secular bull market. Tomorrow is more digital than today, and crypto, which is the fastest adoption of any technology the world has ever seen. So that's what I base my everything code cycle on. It allows us to understand how prices move over time. It even potentially allows us to forecast prices in advance if we can forecast these liquidity flows because we know what they're refinancing. So it seems a ridiculously easy framework, and it probably is, but it seems to be working. So I'll go with that for now.
On July 4, Bitcoin's price dropped to $57,885, breaking key support levels. This marked a more than 2% decline from the previous daily close, reflecting ongoing bearish sentiment in the market. Bitcoin crossed its 200-day moving average MA of $58,400 for the first time in 10 months. This technical indicator, often seen as a critical support level, has not been breached since October 2023. Analysis by popular trader Skew pointed to continuous spot market selling as the main driver of the current downtrend. To reverse this trend, Skew suggests that market demand needs to show clear signs of recovery. Data from DecentTrader highlighted a significant amount of long liquidations around $51,000 to $52,000. If Bitcoin's price continues to fall, these positions could be at risk, potentially accelerating the downward movement. Charles Edwards of Capriole Investments noted that significant sell-side pressure has been a major factor throughout 2024. On-chain data from Glassnode indicates net sell flows equivalent to $24 billion, driven by entities such as ETF, which have been unable to absorb the selling pressure. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.